In today's video, I'm going to teach you how to record a director loan in QuickBooks. A director loan is money the director puts into the business or takes out, and getting it recorded correctly keeps your balance sheet and profit and loss accurate. We'll walk through setting up the account, recording the cash coming in, and then entering repayments so principal and interest are handled properly. Start by creating the liability account that will track what the business owes back to the director. Open the settings gear, choose Chart of Accounts, and click New. For account type, pick long-term liabilities if you expect to repay the loan after a year, or choose other current liabilities for a short-term arrangement. For detail type, select Notes Payable. Give the account a clear name, such as Director Loan, so it's easy to find later. Then save and close. This step creates the bucket that will accumulate the amount you owe. Next, record the money you received. If the funds were deposited into your business bank account, click the plus new button and choose journal entry. Set the date to when the money actually hit your account. On the first line, debit your bank account for the amount received. That increases your cash. On the second line, credit the director loan liability account for the same amount. That records the debt. Add a memo like director loan received for clarity, then save and close. This mirrors what happened in real life. Cash went up, and so did what you owe. When it's time to make repayments, remember every payment has two parts. The principal reduces the balance of the loan, and the interest is the cost of borrowing and is the only portion that shows as an expense. To record a payment, click the plus new button and select expense. Choose the bank or credit card you paid from and enter the payment date. In the category details area, put the principal on the first line by selecting the director loan liability account and entering the principal portion. On the second line, select interest expense and enter the interest portion. Use your lender's statement or amortization schedule to get the correct split so your books match your statements. Then save and close. By setting up the liability account, journaling the funds received, and splitting each repayment between principal and interest, your records will stay clean, compliant, and easy to reconcile. Thanks for watching, and you're all set to track a director loan accurately in QuickBooks.